So at the last level, we were at 100 to 250, and the theme was specialization, right? So we categorized everything. Now we're specializing in roles, specializing in teams. And so now we're past 250, and we're going from 250 to 499, 250 to 500. And the theme here is capitalize. And so at this level, headcount is like I stated. Your role is that you're now chairman, all right? And so the leadership structure is that you've got 5 layers underneath of you. And just to be clear, ideally you want as few layers as possible. Sometimes at this point, like you just kind of have that. And so it's almost like you have these division leaders that kind of run an entire product line or division of the business that drive sales, drive revenue. And so you have these revenue leaders and streams that kind of report into a CEO who reports into you, or sometimes it reports to you. It just depends on how the company is structured. Number of companies here, 300,000, like 0.1%. Very, very small, one out of a lot. And so at this level, let's start with product. What are the constraints? This is the goods, services, and results that you deliver in the business. And so the constraint at this level is that changes to successful products, which are AKA cash cows, actually make them worse now. But you need new stuff to keep growing. So what do you do? And so to graduate in this level, you look at buy or build. So buy is through M&A, so mergers and acquisitions, and build is through R&D, so research and development. And what you're trying to look for is the next rising star product to add to your suite. And so you're automatically thinking 1+ years out. And so remember, at this point, you're this size business. Like you probably have a pretty good product. Like people like it, people are buying it, people are renewing. And so what happens is if you keep trying to change it, it's like you have a 5-year-old, 8-year-old base, and a lot of them are like, don't mess with it. We like it, it works, just leave it alone. And so you messing with it more sometimes, oftentimes, ends up just hurting the core product. And so this is a very famous quadrant from Boston Consulting Group. You basically have kind of 4 like product life cycles, all right? And so you've got your stars. These are the rising stars. So this is growth of the market and then how much of the market you have. So if you have a growing market and you're growing in your market share, the percentage of the pie, that's a star, right? Now, a lot of times the product at this point that you have is a cash cow. It's this thing that prints money, it makes money month after month after month. And so you have a lot of market share, but maybe the market's not growing as much. Or like you're like, we're definitely the market leader. We're definitely the dominant player in the space. Obviously, this depends on the market that you're going after, right? You've got the question marks, which is like, I don't know, these are bets. And then over here, you've got the dogs, right? It's a low percentage of market share of something that's not growing, and probably just a mistake that I thought was going to be a really good idea and ended up not being a good idea. And so instead of messing with the cow and trying to make it into a rising star, we basically have to make a bet on what the next kind of 5 years might look like. Buy or build rising star. So you now kind of function like an investor. And so you look at market trends. So this sounds crazy, but you're like, all right, where's the market going to be in the next couple of years? What are the trends that people are like? What are the adoption rates of new tech I'm going to say trends again, but like what's happening in the market that I can bet on so that I can be there when the demand surges, right? What service line are people asking for today, and what are they going to ask for tomorrow? What geography or country is underserved? This is an underspoken about one. It's like you might have crushed the US, you might have crushed the UK, but maybe there's maybe Mexico or LATAM's a really interesting market for you that you could go pursue.
It's like one of our portfolio companies. We looked at the market trends for that specific industry. What we noticed is that AI was actually taking out a lot of the smaller players. And so we made a decision, I want to say it was about 16 months ago, that our next big product that we need to roll out needed to be AI-driven technology. And so that actually is rolling out right now, and it's incredibly successful. And 18 or 24 months ago, people might have said, oh, is that really? But you start to see the trends, you start to read about it, you start to see what's coming. And so you start building something. So, a year or 2 years later, you have your next product.
The big thing here is that you're optimizing for highest risk-adjusted return. It's the same RICE formula that we've talked about in other pieces. Like, what's the reach of this potential market or product? What's the impact that we think the solution is going to have? How confident are we that we're going to achieve this outcome? And how expensive is it to make this bet? Time, money, resources, et cetera. You're like, all right, well, do I buy or do I build? So this is just a classic business case study question, and there's horror stories on both sides of this, and there's amazing unicorns on both sides. So if you're trying to make the decision to buy, it's like, is this very core to our business, or is this something that just can kind of sit on the side as just a good return of capital? Is this something that we can cross-sell our existing customers? Are there cost savings that we can get by just bringing this company in? If it's in the same industry, Is our company now going to become a platform company? So like Waste Management's a famous platform company. All the guy did was just keep buying these trash routes until it eventually became one of the biggest trash management business in at least the US. It costs money and time to do this on your own versus taking it in. So is there a speed component? Like, is there a race that's going to happen, and us getting 1 year ahead or 2 year ahead, is it going to make a material difference? If you're in a market that's not like this, like if you're in the lawn care or trash, like there probably wasn't a huge amount of like technological breakthroughs happening in trash. And so he still did do a rapid scale system because he did through acquisition. So obviously it worked well for him, but you may lean more towards acquisition if speed is a massive thing. And so it's like, if speed's super important and it's not going to be core to the business, then that might be something where acquisitions it makes more sense. If it's really core to what your like future is going to be, it might make more sense to build it in-house. And so building tends to have better long-term outcomes. It's just that if there are market dynamics that require speed, that is when that other variable comes into play. Or if there's relationships or regulatory agreements that like licensing that takes years in order to get, sometimes you buy it just for the underlying assets or the IP that you could then cross-sell into your existing base, et cetera.
So at this point, when you're looking to buy something, you really want to think of it like you're buying a business which is a product to your business. And so if it's a product to your business, what you have to realize is kind of like what we talked about in the last levels, not every piece of that product is useful to you. And so what are you buying? Are you buying the customer base? Are you buying the team? Are you buying the product? Are you buying the potential? Are you buying the list? And so I think that's where a lot of this fits into, is like, you have to know why you buy the thing, what piece of the business you want the most.
And I'll tell you a fun little story about this. So a friend of mine acquires private wealth management firms. So he buys the book of business from guys who are retiring from private wealth management. And so the thing is that literally the cost to acquire a private wealth management customer, call it $10,000. I'm just making this number up. If he can get 500 clients for $10,000 for less than, like, it literally is cheaper to just acquire all of the customers at once in one shot than it is to go try and acquire them onesie twosie via marketing and events and conferences and speaking and all this stuff over time. And so sometimes even breaking it down to CAC times the entire customer base might be a decision that makes even more sense to you, especially if you have this big cross-sell ability where you're like, oh, this clearly merges into our existing journey. And the easiest way to know that is if you already have crossover with those customers. There's a zillion case studies where people are like, oh yeah, we're gonna be able to cross-sell all these things, and then nothing happens. So I would say like the easiest leading indicator for these types of deals is, oh, customers already being shared. Let's just formalize it and make it easier. And I'll put this last consideration in, is that like, if you wanna, let's say you wanted to expand on a new marketing channel. You're like, you know what, we wanna get into TikTok as a crazy example. Well, you could, if you're a company of this size, build that whole team out, which is possible. But sometimes it just makes sense to just go buy a vendor. So it's like they have a vendor, they are a specialist, and it's like, well, if you can manage 10 customers, I'm a really big customer, and so we can just take 100% of your resources and just put it towards us, and that might just make a ton of sense. And so there's different reasons to acquire businesses in order to grow, but these are just some thoughts. Now, if build, and obviously you can't get okay, I watched this one video and I made this massive, $10 million decision or $1 million decision as a result of it. This is at least just frameworks to think through. So if you're doing build, who's already done this? Sometimes you can just hunt the teams. Sometimes you go for the number 2 at your competitor and say, oh, who are all the people that guy knows? I'll just go hire them. And I'm willing to give massive signing bonuses because it's way cheaper than me trying to buy a business, because now it's like, what's the relative return I can have? This money can go buy something, or I can just put massive bonuses to acqui-hire or bring teams in from another company all together that already function well. Do we understand the space well? If we don't, then yeah, we definitely might be something that we want to bring experts in. Is it worth the delay to ramp up? That's the speed component. The pros of this, obviously, is that the same culture. The cons are around speed and the cost and risk compared to buying. That's what we're really thinking about here. And so in the product level here, now, you have your cash cow, you need to make a big bet. And it's either, am I going to buy this thing or am I going to build this thing? I don't want to keep messing with this core product. Maybe a couple, you have your normal break fix, but you're not going to have this huge order of magnitude change at this point. It'll probably have to be a new product or service altogether. And so that leads us then to marketing at this level. So how you tell people about your stuff. So 250, 500 employees. The constraint here is that lead attribution by channel becomes really difficult because you're marketing all over the place. You have many different channels of getting customers. and platform and regulatory compliance become an issue. All right, and so to graduate here, you shift to brand-first advertising with an omnichannel approach with blended ROAS across all products. And on top of that, you install a compliance process. All right, and so this is what this looks like. So from a compliance process, which is just like the most yawn-worthy stuff in the world, to be clear, all advertising includes risk. And so I was talking to one of our portfolio founders the other day. They talked to an attorney, and if you ever want to just get frightened, just have an attorney just like tell you all the places that you have risk. And so they were like, man, if we do all these things, it's gonna be so hard to blah, 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 blah. I was like, listen, the number one risk is that we go out of business. That's the number one risk. Second to that is all of these other risks, right? And so we need to always make sure that we're taking care of risk number one. Now, can we make sure we stay in business? Like if the way you do business actually puts your business at risk big time, then that becomes the biggest risk. But for most businesses, like if you can't sell anyone, then you won't be in business, right? All advertising has risk. The largest risk is not having a business because you didn't advertise to begin with. And so the big rules that we have, and I've said this in every piece of content I possibly can about marketing, state the facts and tell the truth. As long as you state the facts and tell the truth and you give people money back when they ask for it, you are usually gonna be okay. All right, you substantiate your claims, you create a compliance checklist. And so the key thing here, like when we have to start doing this, it's like sometimes you have to hire one person full-time who's compliance. They look at all the advertising materials that go out. They look at emails, they look at content, they look at ads, they review phone scripts to make sure that people are making promises they can't deliver. It's just that you become a target. Fundamentally, that's it. You've got money now. You're a big business. And people just want to sue because they would like an easy way to get money. At this point, the last point here, differentiate between platform and regulatory risk. So there are some platforms that will have rules that might be more stringent than what the rules of the governing country or city or state that you're in may be. And so making sure that you're clear, okay, is our risk that we're going to get our account shut down or that we're going to go to jail? So just understanding the difference between those two things, or that we're going to get a fine, right? And so this is so boring, and it's just one of those things that you just have to do at a certain point, and it sucks as a marketer. It just feels like the worst. But yeah,
I would suggest that you have legal counsel go through, audit everything that you have, and then you create a list that your team can use. That's basically before any piece of marketing gets deployed out, they have to, check off each box on this list to make sure that it complies with the marketing compliance list. That's the best way that I've ever done it, is basically they have to turn that list in to their manager in order to deploy the piece of marketing to show that it is past the compliance test.
Real talk, what happens is it ends up being a culture that people these are the rules we play by. And so over time, if it gets reinforced, it ends up just being like kind of an unspoken, like, of course, this is how we advertise to be compliant. The next shift is about brand. And so I want to tell this story because I think it's probably the best encapsulated story I can tell about branding. So at this point in time, New Balance is having this big resurgence. And so this is after 15 years of straight decline. And so they got a new CMO in after 15 years of downward sales. And the CMO went to the CEO and he said, hey, can I just swing for the fences? And the CEO said, sure. And so he switched from 70-30 direct response to 70-30 branding, meaning top of funnel, brand awareness, brand associations, collabs, partnerships, endorsements. And then only 30% went to bottom of funnel or direct response offers, direct to sale, ROAS stuff. And so here's what happened. After they made that switch, they kept losing money for 18 more months. They actually lost even more money. It was, he was like thrilled for his new job. But at month 19, they just went like, whoop. And then after that, it shot out like a gun and it went straight back up. And now New Balance is having this big, resurgence right now. And so there's a couple big lessons that I take from this that I think that businesses of this size would benefit from. So number one is that it takes a long time, 18 months, for branding to start paying dividends. And so if you are like, we need to reinvest in the brand, don't expect it to be like a 2-month thing. Like it's gonna take years plural, because New Balance probably has a pretty big budget and they still spent for that money for that period of time before it really started showing returns. So that's number one. Number two is that this ratio is something that I would say, like they had 70-30. That's what I heard from secondhand from the person who talked to the CMO. This is so close to accordance with the 4-to-1 ratio that I talk about in terms of give to ask. And so that ratio has been super well studied. So every 4 pieces, 3 are content, 1 is a commercial, right? So every 4 minutes of television, every 4th minute is a commercial. They might block that, so it might be 12 minutes and then it's 3 minutes of commercials, right? That's how it might work. Same thing with YouTube. If you look at your news feed on Facebook, 3 posts and then an ad, 3 posts and then an ad. And so that ratio of give to ask, of reward to not good, has already been studied as like kind of the sweet spot for a mature platform in order to benefit financially, but also be able to continue to at least maintain its market position. Now, if you want to grow, that ratio gives even more in the give favor. So like when TikTok started, they didn't have any ads and they didn't have ads for years because they just wanted it to be value, 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 right? The whole way through. In your content or in the stuff that you're going to choose to brand, keeping that same idea of like, what is the ratio of value to ask that we have in our prospects' minds? And so I see this 18-month period as people had already seen so many asks, they had to just basically keep giving for 18 months before they could shift that ratio back where they're like, oh, these people are sweet, these people are cool, whatever it is, right? And so if you are going to invest in branding at this point, you have to be able to say, okay, we're going to spend, let's say you're, for simple math sake, let's say it's $1 million a month is your advertising budget. You're gonna say 750 of that is going towards content, it's going towards giveaways, it's going towards tools and products that you can give to your base for almost nothing. Or if you're direct to consumer, this is endorsements that you're doing. This is the LeBron deal. This is the collabs that you can do with other creators or influencers that represent things that your ideal customers resonate with, that's in parallel with your brand and the things you want to resonate with. Okay, so once you start branding, then it's like, okay, we have to look at this as a blended ROAS. So when you start doing this, the marketing team, like if you do have a good brand, the direct response side, the ROAS side of the business, that's all about optimizing the funnel and direct response, getting the immediate sale. Their numbers are going to be absurd, but it's because you have to take into account the money that you're putting into branding. And so your natural inclination is going to be, well, shoot, we should double down on the ROAS stuff. We're getting 20 to 1. It's like, well, you're not really getting 20 to 1. You might actually be getting 4 or 5 to 1 because you had to put this branding in place in order to do that. And so this is why CEOs can come to a big publicly traded company and look really brilliant for a year. Because all you do is you just pull revenue forward. You say, hey, we're going to stop doing goodwill and we're going to make ask and we're going to empty the goodwill coffers that we have in our audience and drain everyone's goodwill bank account right into our bank account. But now you're empty on goodwill and then you got to spend that 18 months of giving again. And so it's this well that you want to always keep digging before you're thirsty. You always want to over deliver prior to the ask. And in my opinion, that's fundamentally how branding works in a longer period of time. You want to start dividing ad spend from top of funnel / awareness versus bottom of funnel. So you blend this together. Top of funnel is long-term, bottom of funnel is the short-term stuff. And when in doubt, go long. The biggest difference between founder-led companies and kind of like professionally managed companies is the founder is almost always thinking much longer term. And so they're willing to give a quarter, 2 quarters, a year towards gives, whereas these corporate guys, these suits, you know what I mean, who are just managing quarterly expenses tend to not think that long because they're going to be on to the next business that they don't really care about. They're just going to rip out profits and move on. And this is what gives private equity and things like that a bad name. But if you are kind of founder driven and you do have that long-term expectation, you have to keep giving. And so you have to, in my opinion, if you're making these excess profits right now, you spend the extra cash on the long-term branding if you want to build something that lasts. At this point, you then add as many channels as you can using that same approach. And when you want to enter into a new channel, you still start with that still brand first, give first, value first approach. So you can kind of like pave the way with goodwill, and then you follow up later with your ask, your direct response things and whatnot to basically get that money back. This is a little bit of a more advanced business topic, but if you're listening to this, then this would apply to you, is that you want to figure out what the cost to acquire a permanent customer is. And so I'll give you kind of like a simple example. Let's say that you have a software business, I'll just make it simple, and you sell a widget that's $100 a month, okay? If you sell, let's say, free trials, and 1 out of 3 trials turns into a customer, okay. You can look at month 12 and month 24 and say, okay, what percentage of customers who come in make it to here, and then after this point, people don't churn. Okay, so let's say it's 1 out of 3 of the customers makes it all the way to that point that they basically don't leave again. Or if you're in a physical products business, once they're here, they're a permanent customer for life. They keep buying Coca-Cola, they keep buying See's Candies, they keep buying Gymshark, whatever. Once you do that, then you can understand the cost to acquire a permanent customer. So it might be the cost of 9 trials is what it costs to create a permanent node of revenue in the business. And so then at this point, it's really just a huge math problem of, okay, it's going to cost us this many millions, tens of millions, hundreds of millions of dollars to then force all the way through to this one point that builds our permanent compounding in the business. And like understanding, it's just like one of these big back of napkin math equations that's so valuable because once you see it, you're like, oh, I know how to get to $1 billion. oh, I know how to get to 10 billion from here. Because you're like, it's this much money, it takes this many trials to make this many customers become permanent customers. Great, let's flow our cash through there. That is what marketing at this level looks like in terms of telling people about your stuff. And so now we move on to sales. So how do you get them to give you money? All right, so here the constraint is that too many different leads and products for any one type of salesperson. And so to graduate here, salespeople specialize. So you'll see a little bit of crossover between the last one and this one in selling different products to different leads using different processes. And sometimes you have to start routing leads by product or territory. All right. And so this is what this looks like. So sales specialization. So we already did the best leads to best closers. So that's kind of like number one, check. The next one is certain leads can only go to certain closers because they only know how to close them. So it's like if you have a direct-to-consumer line and then you have a wholesale line, the process of selling wholesale is going to be completely different. The salespeople selling to wholesale is completely different. The prospects that you're selling to are completely different. They respond to different messaging entirely. I'll give a D2C example. So like here you might have a nano influencer sales team that's just for the tiny influencers. Then you might have mega influencers. And then you have wholesale. Like all of these are very different avatars that you might need to expand into. But each one of them is going to have different leads, different pipelines, different processes, different everything. But at this point, you might be getting them because like sometimes your nano influencer does bring a wholesaler in. You're like, ooh, what happens here? And so this is why we put in the categorization and we put in the specialization of roles so that we get to here and we can capitalize on what we put into place so that we can get even more, we can squeeze even more out of the funnel. All right. And so this also means by consequence that you're going to have different types of salespeople and different compensation and training for each of those reps. And so those teams now have to, like training is going to be in a completely different scaling framework that we have for you guys, but I would be remiss not to at least mention it. The reason that we have to do this though, just to be the big picture, is that you specialize to shorten training. Because imagine if somebody comes in and you're like, okay, there's 6 different processes we use. There's 6 different types of leads for 12 different types of products. The time it would take for somebody to learn all those processes, all those products, all those customers, like it would take forever. So you have to narrow it down and be like, okay, we're recruiting specifically for wholesale. We onboard them specifically to wholesale training. They're going to have this compensation structure. They're going to go after this thing on this channel. And so there's just a lot more stuff going on. And so each of these divisions start to sprout and grow their legs. I mentioned earlier the territories that often sometimes happen, especially if you're like a brick and mortar type thing, or at least you sell into different areas of the US. Having territory leads and things like that starts to become important. Sometimes just culturally, like guys from the South tend to respond more to guys from the South. Guys from the North respond more to that. And so you start matching the types of people with the types of people who sell best to them. And so this is just an explanation of what different processes might look like. If you have a really low ticket thing, it might be boom, 1 call close. The second might be 2 calls with some sort of sales aid in between. The third might be, okay, we have to get someone on, then we have to talk to multiple stakeholders in the company. It might take 5+ phone calls with different stakeholders all at different times to make sure our thing integrates with their solution, blah, blah, blah. And each of those is going to be basically a whole separate thing. And so the theme here, capitalizing, right, is that you have too many different leads and products for any one type of salesperson. So salespeople specialize in different products, different leads, different processes, and you're routing them by territory. And so this is just basically going even deeper on the specialization across all functions of the business, especially sales in this moment, which opens us up to now lots of different customers who need to be serviced.
So customer service is how you get customers to refer, retain, review, and resell, okay? So at this level, support for varied new offerings is breaking because of the volume. So it's basically like the entire department is breaking because there's just too much volume of new customers and different types of customers. And so to graduate, what we want to do is triage support to specialized CS reps. Notice this is very similar to sales. And this is to improve efficiency and shorten training. Okay, so again, really reflective of sales. We want to make sure that we shorten training for new CS since they don't have to learn everything, right? And so if you have product 1, product 2, and product 3, just like Alex was showing on the last slide, it's like we don't need to have a rep that knows how to speak to enterprise level clients if they're only speaking to someone who bought a $5,000 level product. And so what we want to do is make sure we have different training for reps specific to the products that they service. So we want to be able to triage our support. So essentially you have a system that will route the specific type of customer to the specific type of rep that has the ability to serve that customer, right? And so that's like tagging in the CRM. That's like customer segmentation, which we've talked about for the last 6 segments. And that's like routing people on the phone via email. So what that enables you to do is have career progression for those reps that are servicing those higher level customers. So the cool part is that what you can do now that you have the different levels of service, you have customers and then now that you have reps that are servicing those customers is essentially for those reps that start off and they're servicing the lower level customers. You can say, hey, listen, if you kill it, maybe we're going to put you on product 2, and then you're going to make $15,000 more a year. And then, hey, if you freaking kill it there, we're going to put you on enterprise. And enterprise, you can almost double what you made when you came in day 1. And so the cool part is that you create almost a retention system in here, because with all the new products that you have, as you tier them and you triage that support, you also, by proxy, create this system where you get to ascend support reps, which means you extend the lifetime value of your talent, which is fantastic. And so it extends the lifetime value of your customers, extends the lifetime value of your talent. You also get to shorten the time of responses, since the best people get routed to the support reps that are trained on that specific product. So a lot of times what happens at this point, again, is that support is slow because there's no efficiency, because you haven't trained people and you're not rerouting people correctly. So it's like, have you ever gotten on the phone with somebody and they're like, what's your problem? And you're like, the delivery didn't get to my door, so like I don't have the package. And they're like, oh yeah, okay, that's actually a different department. So let me, hold on. And then you get on the phone and then they're like, hey, what's your problem? You're like, oh my God, okay. Well, my delivery didn't get here. I don't have my package. They're like, oh yeah, okay, actually, that's not my department. That's another, I'm gonna have to reroute you to them. And you're like, oh my gosh. And so by the time you get to the person that can actually resolve your problem, you've been on the phone for 20 minutes. Nobody wants that. And so that is why it's so important to triage support at this point in time. And then here's the last thing, is that you wanna make sure that the notes that you have in the system are standardized so that different reps can do different handoffs seamlessly. So for example, if you have somebody that's in your first level product, right? And then they wanna buy the back level product, or they get, passed over and they do a cross sell to a different product. There's notes in your CRM so that somebody can reference what's already happened. They're not having to ask them the same question twice. The customers aren't having to repeat themselves, because this is the biggest thing that happens in big companies like this, is that the customer repeats themselves over and over and over again if you don't have a centralization of notes about that specific customer.
And so just adding this in with regards to like technology, the idea is that think about all the different ways that any customer can communicate with you, right? And so at this point, you probably have many different ways that a customer can reach out. They can reach out via email. Sometimes they reach out via DM on social media. Sometimes they call, right? There's all these different ways they reach out, and all of those have different customers that are using those different methods. And so most of this is just tech integration to route via rules and by channel of communication.
So Alex doesn't want me to talk about this, but I'm gonna throw it in, which is, well, you'll notice the theme of this entire section, capitalized, is that you have almost like product divisions, right? And then below those divisions, you've got your electronics, which has its own marketing, own sales, own CS. Home goods has own marketing, sales, CS. Yummy snacks division, own marketing, sales, CS. And so at this point, you might have CS that is segmented by each division itself. So you have a CS team here, a CS team here, and a CS team here, and they got triaged by the technology.
And structurally, each of these has people who are just driving revenue. That's why it's like almost like these little mini companies that start to exist within your larger company.
Great, so for customer service, we have varied support for the new offerings, and it starts breaking due to high volume of customers. And so we want to triage support to specialized CS reps.
So at this level, you're almost a company of companies. You've got divisions of revenue, and sometimes they're separate, entire entities that you've either bought or haven't bought yet. They've been rolled into a larger group. And just for context, Acquisition.com has over 1,000 employees across all of our portfolios. So I feel relatively confident in talking about some of the struggles that you may be going through and some of the challenges to get kind of above that. If you don't already have a customized scaling roadmap, below this video, you can click a button and it'll give you kind of a general overview. But I'm assuming that if you're at this level, that I think it will help. But you may need more tailored or individualized solutioning. And if that's you, I'd love to invite you out to one of our scaling workshops here in Vegas, where Acquisition.com is based. And so my portfolio team can work with your team or work with just you to help you tailor your specific roadmap to where you're at in your industry right now for your business. And candidly, the businesses that have more resources get more out of it than anyone else, because also this is like what we do. And so if you want to expand through M&A or you need to make a big bet, it's one of the most strategic decisions that you can make. And we've had to navigate this many times across our portfolio. And I'd love to help to the extent that we can. And transparently, the reason we do this is because it's also a way for us to meet other great businesses that we could potentially partner with or buy, depending what your goals are, to help you get to whatever level of scale or impact that you're looking for. And so if that sounds interesting, you can click, I'm sure somewhere around this video. If you're at this level, you can probably figure it out. But you can click, make sure you qualify, and otherwise, love to see you out here.
Which brings us to IT, which is how you gather, store, analyze, and display information. Okay, and so at this level, the constraint is our old tech stack is insufficient and needs updating. You've essentially broken it with volume. Notice there's a volume play here. Departments demand new and specialized solutions. So here's the thing. In the last level, we talked about how we needed more specialization of tech. That started in that level. At this point, you should have full-blown, just like I showed on the last slide for CS, you also have tech teams for each product division, right? And so each major tech function has its own updated and segmented tech stack by this point and is fully fleshed out. At this point, they cannot function without their own autonomous teams. Now, does that not mean that there's one person that regulates all of the teams of teams? No, that can exist, and we'll talk about that in a different training. At the same time, the new thing that happens at this point is you probably need to consider a new enterprise level software. So at this point, when you've gone from, you probably are using the same CRM that you were using when you had 50 people and you had way less customers. At this point, you probably have to look at an entirely new solution, something like an ERP. So you might start off with a CRM, but then you have to move to a real full-blown customized solution, something like an ERP, like a NetSuite or a Zoho, or something that has more robust customization so that you can actually fulfill all of the individual needs of all the departments and all the products. Because at this point, the thing that you notice is that even just something down to the detail of the CRM you have doesn't even have the right login abilities to account for the products and the owners you have of each. So you're like sharing login credentials and stuff. That's because you have the wrong system. The right system has all the right functionalities to accommodate a company of this size. And so again, each function of IT needs its own czar, essentially, right? You need a marketing czar, you need a sales czar, you need a CS czar, right? And then below that, we need prioritization of that system to make sure that they don't get bogged down with work that doesn't matter, right? And so that's why we have to make sure that we have inquiries and we have SLAs established.
And I'll jump in. The thing is that a lot of times teams and individual contributors at this level almost have like the IT function specifically is like an internal service that it's almost like a vendor that exists in the business to service the other functions of the business. They support value creation. And so oftentimes when you give someone a blank check on help, a lot of individual contributors don't understand the cost of the asks that they have relative to the impact of the asks. And so these guys just become free help and they just get inundated with a bunch of useless stuff. And so you have to just be able to say, like, these are the only things that these guys are working on, and this is the agreed upon triage order of importance in terms of prioritization. What ends up making IT departments ineffective in general is that they spend all their time working on stuff that doesn't matter.
And so you want to have different levels of IT talent to organize the infrastructure to make sure that it stays working correctly. And at this point, you are going to notice that you probably have to bring in-house developers. So with the tech that you have, with upgrading to an ERP level software, it's going to make sense that you have your own in-house developers at some point. It's probably going to start in, maybe it's marketing, maybe it's sales, and it's going to move its way down based on the needs of your company. So that being said, for IT, our old tech stack is insufficient, needs to be updated, and our departments need specialized solutions. So we've got to move towards an updated tech stack, also an updated enterprise level software, which brings us to recruiting, right? Which is how you find and hire people to work for your company, okay? So at this level, the constraint is that the best talent is not responding to your recruiters or to anyone besides you, okay? And so to graduate this level, this is really fun, is that the founder is going to directly attract talent. So something I want you to think about is you are the magnet for talent at this point because the people that you need on your team are highly specialized. They're very hard to find. Think about the amount of companies that are in this level, not that many, and you're trying to find people competing with all those companies to work for yours. And so at this point, you are going to have to realize that you are headhunter. You are headhunter. You are headhunter of the company, right? And so you are going to be the one, you're the chief salesperson selling people on the growth and the vision of the company. This is something that I can't stress enough. It's not something that you can outsource to a recruiter. It's not something that people can do for you. Nobody's going to respond to anybody more than they will respond to the founder, the CEO of a fast growth, large company. Okay, so when you knock on their door, they might not know you personally, but they've seen your name, they've heard of you, they've even just seen your marketing or an ad, and they're like, holy crap, I'm gonna open the door just to see what's up. And so that's what you get for being the CEO or the founder, is you get them to open the door. Now the next thing is that you go in the beginning when you have a smaller company, you're selling customers and you're selling your teammates, and now you're selling top level talent on the vision of the company, and you're selling them on the vision of your company being so big that it can fit their vision for their own career within it. And that's really why it's so important at this point in time that you are the one bringing them in. Second to that is that these people are highly autonomous. They don't need this job. And they're going to have so many more questions, because most people that get to this level in their career and are this kind of talent, they centralize their entire life around this job. And so it's not, oh, I'm changing a job, I'm just getting a different 9 to 5. It's, oh, I changed my whole life. I'm orienting myself into a new mission. I'm on a new rocket ship. And so if you think about it like that, you'd understand why you might have countless conversations with these people over the span of months or even years. And I can tell you that I am actively in conversations with multiple people who take months to persuade to leave their current opportunities to come into our business. But think of it more like courting. It's like dating. It's like we got to date before we get married. And there's some really interesting examples of this. If you look at Steve Jobs, he constantly talks about how it takes 12 to 18 months to get the top people from his competition. Okay, and so that's something that he cites over and over again, is it might take 12 to 18 months to get the person that you need to grow the company. Another one that you can look at is if you've ever seen Mark Zuckerberg. He talks about how he had to take Sheryl Sandberg out to dinner for a year. They went to dinner together. I think it was like every 2 weeks, maybe it was. Do you remember?
It's a lot.
It was a lot to persuade her to come to Facebook, right? And it ended up being one of the best decisions she could have made. But I would also argue that one of the reasons Facebook is so successful is because he assembled a team of the right people to make it happen.
And so I'll just add in here real quick. This might be like, wait, am I going to be the head recruiter? No, you're going after high value targets. Like you're still, you're going to have a team of recruiters at this point. I'm just being clear here because I was talking to one of our mutual friends who's got a company of this size, and he was like, make sure they know that I'm not recruiting like frontline. I was like, I know you're not recruiting frontline roles, man. And so it's like, you're not recruiting frontline manager, director, even like sometimes even leaders. You're not playing there anymore. You're looking for people who are rainmakers. You're looking for people who bring Rolodexes of contacts so that they can get you into huge new areas of distribution or new geographies that they already have all the handshakes and they know all the key stakeholders, or entire teams that they have with them that just are going to move with. Like these are people. And if you want to go back to the that tweet I have, and so I had this tweet that basically only applied to very big businesses, but beyond a certain level, no one works for you anymore. This talent doesn't work for you. They just work with you. They join your team and you're on a team together, because the people at this level have 100 other options begging to have them. They have recruiters in their inbox every day, which is also why it's you, the founder, who's going to break out of every other recruiter and headhunter that's spamming their inbox. And so you're not doing them a favor by giving them a career. They're doing you a favor by building you a company. And so that's the thing, is like these are weapons. These guys know they are like who they are, and they've got a huge track record, and they're still hungry. And I think to Layla's point, it's like, this isn't the person who's in their career who's like, I've made it. They're people who are very mission driven, and their whole life goes around work. And so they want to make sure that you're at least matching their level of intensity and intelligence and drive.
I would say like a lot of founders would take the time to close a $10 million, $15 million contract, $20 million contract, while closing somebody of this caliber on building a department or a product division or whatever it might be within your company could create 10 times that kind of wealth for your company. And so it is absolutely worth your time to do. And so that is recruiting. Okay, your top talent is not responding to recruiters anymore, and so you become Chief Recruiting Officer. Which brings us to HR. HR is how we decrease the likelihood that employees and regulators sue us.
Yay.
And so at this level, what happens is that churn increases and we don't know who we need to grow. So in order to graduate, we need to implement strategic workforce planning. Okay, what is that? That is making sure, that's essentially a nice word for saying organizational design. So let's look at what organizational design is, or strategic workforce planning. Okay, it's looking at our objectives as a company and then figuring out the who to make the what happen. So the what is where we're going, what are our objectives, our goals as a company. And then we say, all right, who do we need? How many of them? How quickly do we need them? Who are we going to need to move around? Who are we going to lose by then based on our churn rate? How are we going to backfill those people? And who can we promote? Are there people that we can move up? Where do we want to have backups in case somebody leaves, gets pregnant, quits? And where do we need hyper specialization in the future? It's essentially just like you do projections for your financials, you do projections for your workforce. Okay, this is actually something that I do right now, which is essentially building out a 12 to 18 month workforce plan. It's predicting who's going to leave, who's going to get promoted, what roles are we going to need, and looking at, okay, right now we have 315 people, but in 18 months, we're going to need to have 500 people to accomplish our goals. How are we going to get those 500, and where do they fit in the org chart?
And Layla does this really cool thing, which I don't think it's in here, but when she does these organizational design maps of like what's going to happen next, is that she has these little simple color codes where it's like, okay, a green is somebody that we have internally that we're going to promote. A yellow is somebody that like, there's somebody there, but they're weak. A red is like, okay, there's clearly a department that should be here, and we've got this whole team of people basically routed to another person who's just competent, but really shouldn't be leading that whole team. And so we've got a red there. So we need to fill that. And so by looking at this, I love when she does it because it's this very simple map where you can just see, okay, we got a lot of reds, or it's like, okay, we got greens on this side, but there's a lot of yellows over here. So we need to upskill some of these people. And so how many of these people can we just train up versus bring in, move around? You're thinking about allocating resources, right? You're a chairman at this point. You're an investor. You're like, okay, these are the assets I have. These are the resources. How do I redeploy them and mix them to get the best returns?
And the thing is it's not like at this point, how everyone's performing. You're going to have to create a process that your managers can use to rate the employees on their teams. Are they red, yellow, or green? And then you use that to look at, okay, now I need to know what kind of resources to bring in based on the feedback that they've given me, right? And so there's another cool thing that you can teach your team that you've probably seen this as a project management tool. It's called the RACI matrix: responsible, accountable, consulted, informed. And so I've taken this and I like to use it actually for how I do organizational design. So responsible is who's the person who actually does the task, right? Who's the one doing the job? Accountable is the person who's accountable for the process or the task being completed, which is usually that person's direct manager. C is consultant. Who are the people that are not directly involved, but they're consulted with because maybe they are a subject matter expert, right? Like I don't do the recruiting and I'm not even right above recruiting, but I am consulted for recruiting because I am an expert in recruiting, okay? Informed is who are the people that need to receive information about the output of the task, right? So this might be the whole leadership team, the CEO, the CFO. And so when I'm doing workforce planning within each team, I like them to build out a RACI matrix for their team specifically. Because when they're trying to fill gaps, it's really easy to see where the gaps are if you roll out a matrix and then you see, oh, weird, we have all these people, but this one person is R for all these for all these tasks. Or, hey, we have this whole leadership team, but only one of the leaders is actually the one that's accountable for all of these things. The other ones are just being consulted or informed, so they're being underutilized, right? This person has too many direct reports. And so it's a really great way of seeing how resources are deployed within a specific team. And so I'd suggest try it with your teams. I don't think it's useful to do with the entire company, but it can help if you have your teams use this framework. They can then give it to you, so then you can use it to figure out the entire organization and what it needs to look like so that you can plan. And so that is HR. Churn increases, you don't know who you need to grow, and you don't know how to add people to the organization to achieve your goals. And so you want to implement strategic workforce planning, aka organizational design. Which brings us to the last, which is finance.
And so finance is how you manage your money. And so the constraint at this level is that your finances aren't legit enough to get other people to give you money. So think about this in terms of raising money, borrowing money, buying your business to make a big investment in M&A or R&D. So if you recall from the product section, we've got our cow, we have to make a bet, buy or build in order to get a rising star. So the thing is that at this point, sometimes you need outside capital in order to do that, or at least to accelerate it. And so to graduate, I like this kind of frame of like, prep for sale. So to be clear here, I'm not saying you're gonna sell your company. That's not my point. It's that you wanna get your company sale ready. And that's not like, oh, now we wanna trim, we wanna show our margins, anything like that. It's just, how do we clean up everything so that we can double down and capitalize on the opportunity that's in front of us? And so this is where you wanna get maybe a quality of earning. Maybe like one of the biggest hacks in the world is getting a banker audit, which is talking to investment bankers and being like, hey, tell me everything that's wrong with my business. Now, they want your business because they want to sell your business later for a commission. But some of the best free consulting in the world that I've ever gotten is just talking to investment bankers, because they'll tell you everything that's not good with your business from the eyes of an investor. And just as importantly, from the eyes of a lender.
And I would say the key here is like you're looking at your business as a product for the marketplace. And so you're really trying to figure out, how do I make this product more appealing to be bought? Not even just because you want it to be bought, but because it makes it a more valuable product to own.
And so I like this little analogy, which is If you've ever owned a house before and sold it, you go through this process where like at the very end when you're about to sell it, all of a sudden you like fix the door, you fix the patio, you power wash the side, you put some lube on the thing so it doesn't squeak anymore. And at the end you look at the house, you're like, this house isn't so bad. Maybe I will keep it, right? And so it's like you kind of want to do that within the business because then you're the owner and you do get to keep it.
Yeah, it was funny because the other night we were having dinner with one of our portfolio CEOs and he actually said, he was like, I'm not saying because they have interest in selling a piece of the business to a different
They're
partner.
getting pursued a lot by different investors.
Yeah, so they have a lot of investors that are interested in them. And, as we're going through this process of, quote, prepping for sale, the owner kind of said to us, he was like, I don't know. I keep looking at it. It's like, if these couple things, we get all this stuff in place, like, why would I want to sell the thing? And it's kind of the conclusion a lot of people come to. So, even though we go through the prep for sale process, like by no means does that mean that you need to sell the business.
And so, yeah, you speak to bankers, you get your free consulting, you clean house on the people who no longer contribute. You'll get third-party audits beyond a certain point to ensure that nothing's missed. Remember, internally we said these internal audits. Well, at this point, sometimes it's just good to have somebody on the outside who's kind of a neutral party. Double check all your internal team's work. So I had a friend who had a business years ago, and he actually did this process, and he actually found out that one of the people on his team had stolen over $20 million over like years and years. And so this was many, many years ago. He was telling me about this story. And so I was like, geez, he's like, it's good to have outside eyes past a certain point, right? And so the next one is you might want to reconsider your legal structure because sometimes if you're an LLC or an S Corp, it doesn't actually make you an ideal structure for like a minority deal or some sort of dividend recap, things like that. Talk to the lawmen and they'll let you know where you're at with that. There's sometimes it depends on the company, but big investments hedge. So Ray Dalio tells a story in his book where he was going to McDonald's, and basically when you're buying in so much volume for if you sell products, for example, and you have key ingredients like beef or Starbucks has coffee beans, right? Like a change in a couple cents per pound or of whatever is going to have a huge impact on the profitability of your business. And so basically there are investment products where you can hedge against that. So it's like, okay, if I make a bet that soybeans go up, then if they go up, then I'll get paid, which will offset the loss that I would have from the fact that my cost of goods went up. And so on the flip side, if the cost of soybeans goes down, my cost of goods is going to go down, so I'll make more profit, but I'll lose the bet. Right? And so that hedges your bet so that you can kind of smooth out the profit. We're talking big business here stuff, but these are some things that you can consider if you have huge reliabilities or huge purchases that you need to make in order to make the business grow. Big thing here is that if you are not wanting to do any kind of sale, but you still want to have more capital to potentially make an acquisition or buy a team and carve it out of a company, or maybe it's on the marketing side, like I want to go get these two big brand sponsorships, but like it might cost me $20 million a year to get these huge sponsorships. Okay, if that's the case, then sometimes having debt relationships can be really helpful, right? And so that's where you can have lenders, you can have banks sometimes, but usually it's going to be kind of private lenders and they're institutional typically, who they are all about the downside. They actually don't care about your upside. They just care about how likely it is that you're going to continue to make money so you can pay back the debt with the interest that they're going to make their return on. And so when we do all this stuff, it allows you to gain access to a whole new pool of capital, money, so that you can make the big bet to get your rising star or to buy the rising star and incorporate it inside of the business. And so that's why from the finance perspective, a lot of this is super professionalization so that you can capitalize on the next big bet. From a finance perspective, finances aren't legit enough to get other people to give you money for them, to make a big investment in M&A or R&D, so to buy or build. And so you go through a fake sale, you do a prep for sale, you get a quality of earning, get bankers to audit you, get free consulting, you look at your capital structure in terms of how the ownership shares are structured, what the legal entity is. You might have to make some hedges to even out the cash flow in the future based on bets that you're going to make. And at that point, you will have the option to either sell a small part, get a strategic partner in who, let's say someone says, I'll buy 10% of the business, and in exchange for that, I'll also give you my distribution to 10,000 brick and mortar stores, right? That would be a strategic buyer that could help you both give you cash, offset risk for you, and help you expand the business. And so at this point, capitalize was the theme of this layer. And all of this around making the big bets that we need to do to expand the company. Like we had to make big bets in people. We have to plan, how much do we need to get in the future there? Big bets in product, big bets in brand in terms of marketing. What are the big investments there? And so that's kind of the theme here. It's like, because how are we going to get past 500 to 1,000? Because that's going to be the next level. And so the big constraint here is that you hit a plateau and no growth is occurring, or growth isn't occurring, more specifically, as fast as you want, or in the main product line that you have. And so to graduate, you're gonna need to make a big bet. So this is typically, you're many years into the business at this point, and for lack of a better term, it's like you might have to shake things up again to get to the next level. Like, how do we 10x from here? And that's kind of the answer that you're kind of prepping for at this stage. Big picture. We graduated to here. Now, above this, you'd have 500 to 1,000. We don't feel confident talking about it because we haven't been there. We are technically crossing into this threshold right now with Acquisition.com across our portfolio companies. I vetted that framework with multiple of my friends who are there or above there to make sure that that was justified. Of course, this triangle could be significantly bigger because you can get up to a gazillion employees. You could be Amazon, have 1 million employees, right? But I think for most people who watch my stuff, who are business owners, who oftentimes are bootstrapped, this is an unbelievable success having gotten to that level. I mean, it's 1 out of a gazillion that actually get there. And if you're like, man, I'm just randomly on this video, I don't know how I got here, I would love to get a custom plan specific to me and my company. We can give you a customized $100 million scaling roadmap that will show you what level you're at, what you need to look at between departments, and kind of the specific things at this level to be concerned about. And we do this in 3 distinct ways. So one is we're gonna tell you what's going on right now, what you need to look out for. That's today. You also want to look in the past to make sure that you've shored up everything up to this point, because you might be behind on a couple things and ahead on a couple other things. And so if you're behind, it's like, well, the longer you let that fester, the riskier it gets as you scale, and the more likely that thing will break and cause calamitous damage to the business or set you back 6 months or 12 months or a year, whatever. On the other hand, once you have those things fixed, it's good to have a line of sight into what the next level is going to be so that you don't screw yourself today for a change that you're going to have to make tomorrow. And so to avoid all of that stuff, Layla and I have just tried to compile all the lessons that we've had. You can't teach how to get to $100 million in 12 hours, but we do our very best to try and consolidate these learnings for you, so at least you have themes of the things that you're probably gonna have to do in the business. And so if you want one of those customized roadmaps that I said, you can click the button below, enter your information. Our little dwarves in the background will send it to you. I hope you enjoyed this. We also have in-person workshops that we run at our headquarters here in Vegas. And so if you're like, you know what, I would love to just get hands-on help from functional experts who are actually doing this every single day. Like, I'm at this stage, I do need to revamp my advertising, but I need like 10 more nitty-gritty steps that would be beyond the scope of this. Just hit us up. We'd love to see you out here. This is obviously only for business owners who qualify and have businesses. We open up 1 or 2 dates a month. So if that sounds interesting, you can go. I'm sure you can find it on the site. Otherwise, thank you. See you in the interwebs.